Hi, my name's Josh Mahony, Chief Market Analyst at Scope Markets. I wanted to take a look ahead to a week that will culminate in a RBNZ rate decision that could see the Central Bank of New Zealand raise rates in an environment that does see everyone clamour for a timing for an interest rate cut from almost every other major central bank out there. Interestingly enough, there are some that are calling for 2 rate hikes, and this provides the potential basis for strength for the New Zealand going forward. So I wanted to look into some of the stats that lead us into this decision that takes place overnight, the night of the 27th of February or the morning of the 28th, depending on where you are in the world. But essentially, we look to be gearing up towards a potential period of outperformance for the New Zealand dollar, building on recent gains. And question marks around about whether we're actually going to see that rate hike, whether we see 1 or 2, or when it actually occurs. That really should become more prominent as we move forward into next week. So I wanted to get ahead of it and start talking about it this week. In terms of some of the charts I wanted to show you, first and foremost, I wanted to show you the annual inflation rate. Now, what sets aside the New Zealand economy from or New Zealand data from some of its peers is that generally other countries will report inflation on a monthly basis. In New Zealand, it's a quarterly basis. So as you can see here, we're looking at relatively lagging numbers when it comes to New Zealand CPI, and we're awaiting the next reading. But that's not going to come by the time of this current meeting from the RBNZ, which is happening next week. So we can look at where the New Zealand economy is in terms of inflation and compare it to where some of these other countries are. And you can note that it is elevated in relation to those other countries. Notably, it's the UK that remains at 4%. But if you look at sort of, as what I often do when I'm looking into these sort of central bank or inflation breakdowns, if you look at the sort of month-on-month readings, I do expect to see significant disinflation coming into the forefront over the coming months for the UK. So how do things look for the New Zealand inflation picture? Well, this is the headline CPI reading 4.7 or 4.66. As we can see, still some way away from the 1 to 3% target, with the center of that being 2%. Notably, the last quarterly reading we saw actually gave us a reading of 0.5. That was a marked contrast to the 3, or well, more than 3, but the 3 other quarters within that year, where we saw 1.25, 107, 179. You know, those as quarterly readings, considering the fact that we're looking to try and get back down towards that 2% region, they don't fill you with confidence. However, if you look at just that last quarter, 0.48, of course, if you annualize that out, as we see at the bottom, that actually takes you below 2%. But that's only annualizing 1 quarter's worth. And we don't necessarily know if this is suddenly a new trend where everything is now going to be back on target, or whether this is a one-off, considering what we have seen in the past. In terms of where we're looking for, say, as I highlighted with the UK, that disinflationary pathway, because I see some sort of chunky figures at the tail end of this year-on-year reading that are going to drop out soon. We can see here we have got that 1.25 that's going to drop out this time. So let's say, for example, we saw another 0.5% for the first quarter, which we don't necessarily know will happen. But if it does, then what would happen? Well, we could potentially see disinflation to the tune of, say, 0.7% off. So you'd be taken back down towards that 4% level, still some way away from it. If we then saw it again the time after that, you'd be looking for a sort of reading around 3.5% by halfway into the year. So you're talking about, you know, way down the line where you're still well above inflation target. And that does provide the basis for the RBNZ to potentially take further action. Now, bear in mind that the RBNZ's rate is currently at 5.5%. That is the same rate that we have over in the US. It's also the same rate, well, just above the UK rate, which is 5.25. Canada, we've got 5.5%. Eurozone 4.5, RBA 4.35. So the RBNZ is already at the top end of that sort of boundary for its peers. So the question mark is whether we're going to see it move beyond that and really make itself an outlier, which also has the benefit of sort of carry trade potentials as well. In terms of inflation expectations, this the latest RBNZ household survey does show you that we've got continued upside in terms of perception of inflation, which is the orange line, but there is a decline in terms of inflation expectation for 1 year ahead, which is a promising sign. And as we can see here, there is generally a correlation with that inflation rate, but still it does look a little bit like it is a relatively lagging indicator. It sort of rolls over after inflation's rolled over, and it picks up once inflation has picked up. So this is the headline that I remember reading, a couple of weeks back and thinking, wow, it's one thing talking about the possibility of a rate hike. It's another thing talking about the potential for rate hike in February and in April. That, is an outlier. ANZ have come out with this view, and it doesn't necessarily mean that it is the common view amongst markets. It's not, but certainly does highlight the perception with some that significant action still needs to be taken by the RBNZ. In terms of market expectations, this is according to LSCG, but essentially the Icon platform. Like I said, we're at 5.5 at the moment anyway. So markets are actually providing a 25% chance of a rate hike this time around. If you look into the future, you're looking at, say, more like 42, 43% chance of a rate hike by May. We still don't necessarily have any of these months where we see a rate hike as the base case scenario. So markets still expect to see rates remain steady, and then they're expecting to see the first rate cut come into the fore by November time. Okay, so that sets it apart from most other central banks, because most other central banks are expected to cut rates earlier. But nonetheless, this does really fly in the idea that ANZ are saying, we're going to see a rate hike in February and then another one in April, because that's just not what markets are pricing at the moment. Now, something's got to give here. Either ANZ are completely wrong, and I would say that given their prominence in the region, they probably have a better finger on the pulse than I do. Or else they're right and markets are pricing this wrong. And then before we see the potential for significant repricing to the benefit of the New Zealand dollar. Now, what could quite easily happen this time around is that we don't see a rate hike. However, some of the commentary around it point towards the possibility of a rate hike in April, or we see a rate hike this time around and suddenly markets are caught off guard because they're only pricing a 25% chance this time around. Either of those two events would likely be beneficial for the New Zealand dollar. It's only if we saw relatively dovish comments coming out of the RBNZ that we would then likely be looking for a significant sort of rolling over in terms of the New Zealand dollar, in part because, look, markets aren't pricing a rate hike at the moment. So that would be an outlying event. With all of that in mind, I just wanted to show you a few charts to see where we could potentially see that strength coming into play if we were to see either a rate hike or a hawkish stance from the RBNZ. I'm just going to go full screen on this one because there's plenty of charts on it. So first and foremost, this is the sort of big picture view that I like to take for any currency, so you can really see where the strength and the weakness is playing out. You might be a New Zealand dollar trader, but sometimes people will only pick a specific market. I like to see exactly where the trends are playing out. Another way of looking at it is this is essentially like the dollar index, but for the New Zealand dollar. What's interesting here is that it looks like we've bottomed out here in terms of the New Zealand dollar, showing the potential for a period of upside here. The caveat here is from a wider perspective, we have it in a downward trend. And so you could say here, this is an inverse head and shoulders formation because, the downtrend has now seen us rally up almost into that prior high. Now we've seen what looks like a potential higher low. And as I said on the daily time frame, looking like we've sort of based out here and looking to break higher. So if we do see a rate hike, or if we see them indicate the possibility of a rate hike next time around, that could instigate a move towards the upside and set in motion the possibility of this having bottomed out. Remember everything that's happening around China and what that means in terms of sentiment for the likes of the Australian dollar, the New Zealand dollar, the fears over what would happen to the sort of global economy with higher interest rates. And these are very pro-cyclical currencies we're talking about here. All of these play into that wider theme that has been dominating over recent years. Nonetheless, we have the possibility of this being a sort of basing out, but it really depends on exactly how things play out. So, like I said, let's take it back to that wider picture. So let's go sort of one by one. In terms of New Zealand dollar against the US dollar, we've again seen this rally, the pullback, and now we're basing out. And you can see here we've sort of broken up through this near-term resistance. So similar kind of picture to that previous sort of New Zealand dollar index that I've shown you. Another really interesting one here is I'm just going to go on a weekly time frame and show you this euro against the New Zealand dollar. Bear in mind, I think that we're going to see European inflation come down in a really meaningful manner soon. That's the same for the pound or for the UK. And so that would mean the possibility, if we did see a hawkish tone from the RBNZ, that would mean the possibility of downside for Euro Kiwi, downside for Sterling Kiwi. And that's how it seems to be playing out at the moment. You can see here the creation of lower highs and lower lows on the weekly time frame shows you that the wider basis is there for further downside for this pair. In terms of the pound, it's a similar kind of story. The recent rally up towards that prior swing high. Let me just grab this on here. So it's 209.88. Well, we came into it, but we're rolling over since then. Again, New Zealand dollar strengthening against the Japanese yen. Well, most things are, quite frankly, and that's a hell of a trend. So if you're looking for a trending market, look at Kiwi yen. And in terms of Kiwi against the Canadian dollar, this looks very similar to, let's see, if we've got that New Zealand dollar against the US dollar, we've got that bearish trend for the Kiwi, a similar kind of picture here in terms of the Canadian dollar. So it would need to fight back against the trend here rather than something that has been playing out significantly of late. And in particular, the wider trend for dollar yen is the clear-cut one here. Elsewhere, weakness in terms of Kiwi Swissy. So again, it would need a trend reversal here for us to see some strengthening coming into play, but certainly starting to try and tap against that first resistance point at 0.55. And then Aussie Kiwi, an interesting one here. We had this sort of symmetrical triangle. We broke down and then, let's just get it on the daily time frame, broke down from that symmetrical triangle. And we're sort of pausing here because we rebounded, failed to regain that ground really, and we're starting to roll over again. So this looks like the potential for a bearish breakdown here for the Aussie against the New Zealand dollar. I can show you it in greater detail here. First and foremost, we'll just grab sort of three examples of those that I think look particularly interesting if we do see that New Zealand strength coming into play. First and foremost, euro against the Kiwi dollar. I expect Eurozone inflation to come down heavily in the coming months. And given the question marks around the Eurozone economic picture, I think there's the basis for them to cut interest rates to widen that differential between the ECB rates, which already are relatively low compared to New Zealand, and the RBNZ rates. So we've been heading lower for a significant period now. It's around about a month. And that looks like it's just playing into this new bearish trend that's playing out here. So there's a good chance that, you would say, well, we're just above that prior low. So let's say we were at something like that. So on this occasion, we sort of moved marginally below. So there's a good chance that, if we were to sell off, we'd move back into these kind of areas. That tallies up with your 1.72 kind of area. So the possibility we're sort of some way halfway into that move before we see that next retracement. But I think there's a good chance that what we're seeing here is this having topped out and that we're now in this more bearish phase for euro against the Kiwi dollar. Euro yen, I just wanted to show you that in greater detail. Again, this bullish trend that's been playing out over the long term, continuing to play out as things stand. I think, for all this talk of possible rate hikes from the Bank of Japan, I just think that would be only one rate hike to try and move them out of negative rate territory, if that. Wage figures, GDP data, inflation doesn't necessarily support the case for any sort of decent period of monetary tightening. We've broken up through this 161.87 and we're pushing onwards and upwards from there. Let's look on an intraday basis. Look, this is playing out absolutely perfectly. Look at this lovely trend that we've got here. So it's just that stepped move. So each time you're looking for that next pullback and rally. And that's exactly how it is being playing out. Not necessarily deep retracements, more like your sort of 38.2 to 50% retracements, but nonetheless, That's because it's a highly trending market. So now that we've broken up through resistance, you'll be looking at 161.94 as the next swing low to be hanging your hat on. That if we break, then it reverses this trend or negates it for the time being. Until that happens, Euro Yen continues to look a really interesting one. And finally, the Australian dollar against the New Zealand dollar. Things had been trending within this symmetrical triangle. Let's just grab it here. There we go. And on the top end as well, but we're more interested in the bottom at the moment. So we had that symmetrical triangle. We've pulled back. The rebound has failed, and we're now starting to roll over again. So it looks like we're exiting this pattern towards the downside. Follow this market. This looks like a really interesting one. Trying to rebound a little bit here, but I think there's a good chance that we do see this market roll over. And in particular, if we do see this market really providing us with the basis for, if we're looking for that New Zealand dollar strength coming into the fore, if we see a relatively hawkish tone, if we see a hawkish outlook, or we see a rate hike from the RBNZ, then that provides the basis for that breakdown continuation for the New Zealand dollar, the weakness for the likes of Euro Yen, and further strength for the likes of the New Zealand dollar against the Japanese yen. All in all, we're looking at a market that could be a really interesting one for you guys to follow over the coming week. In my mind, I think it has the basis of a potential wider, longer sort of medium-term picture for strength for the New Zealand dollar if we're looking at which currencies are particularly attractive at the moment. This is one I'm certainly keeping a close eye out on.